Lorelia, welcome to another episode of the Never Lose a Deal podcast, where I talk about creative financing and real estate. And so today's topic is we're going to do a recap. If you're watching this on YouTube or if you're listening on one of the streaming apps, you'll see that the title of this segment is Creative Financing and Real Estate Recap. Is it a get rich scheme? And the reason why I wanted to do a recap is during the whole course of April, if you do not know, April is considered financial literacy month. And so I wanted to give a different spin to those who have a foundation in financial literacy, meaning they understand all the components that go with financial literacy. Of course, if you look at the whole scheme and the gamut, it can go into budgeting, it can go into saving money, investing money, all types of areas. But the area that I primarily focused on within the month of April is really real estate. And I went even deeper to talk about different creative financing strategies. And one of those strategies was self directed IRAs. So, all throughout the course of this month, whether it was on the podcast or if you got some of the bonus episodes on my YouTube channel, I talked about the things and the investing opportunities that are available to you with a self directed IRA. Now, if you don't know what a self directed IRA is, I'll do a small recap on that as well. A self directed IRA is a retirement account that allows you to have control of what it is that you want to invest in. And so there are many things that you can invest in with a self-directed IRA because it's usually alternative. It's alternative investing things outside of real estate, but I just focus on real estate. And what differentiates the self-directed IRA from the traditional IRA is that many people who are familiar with the IRA, they are familiar with it being invested in stocks and mutual funds or what have you, and there is a fund manager. Hence, you have no control. And so individuals, primarily real estate investors, who like to have control over their retirement, who like to have control of their investments, prefer to go to a self-directed IRA because there they can hold real estate and be able to use those profits and income to grow, and now of course get all the tax benefits that go with that with real estate. Well, that self-directed IRA that I just mentioned is a strategy of creative financing. And so even if you took the topic of creative financing and you had a panel of people, real estate professionals, investors, and you asked them the question, what is creative financing? They will all give you a different answer because there is not just one strategy that goes with creative financing. There are many things that can fall under creative financing. But what is the great thing about creative financing and the beauty of it is that it allows you to go outside of the traditional realm of how people view real estate. If you ask the large group of individuals who may not be familiar with the investing side in real estate, they may tell you, oh, there's FHA or there's a conventional loan, and you go to a mortgage broker or a mortgage loan professional, and they get you approved for a mortgage, and hence you buy real estate. Well, outside of that, there are other ways in the investing realm of things of how you can buy real estate. And so those are some of the things that I talked about throughout the course of the month. I talked about all types of strategies that can fall under creative financing, hence self directed IRAs. But this weekend, which is why I want to do the recap, is I had a live virtual workshop. Now, what was so interesting about this particular workshop is that I got the opportunity to talk to some individuals over the phone. to really get an idea of where it is that they may be hitting a roadblock when it comes to creative financing. And that is what I want to talk about today. So, creative financing, just so you know, is not a get rich quick scheme. What I always tell people is that real estate is not get rich quick, but it will allow you, if done right and you stay the course, will allow you to get financial freedom. And so that was the main thing that I want to bring home to people, because when you take the self directed IRA, if you heard me in the beginning, I talked about the self directed IRA is a retirement vehicle that allows you, the owner of the self directed IRA, to have control of their retirement investing options. Well, when we think of retirement, what do we think? We think long term. Now, depending on your age, for myself, I'm 50. Now, using the table of what they say retirement age is, according to the tax law, any age after 59 and a half, there are things under the tax law that will allow you to be able to draw that retirement money from your investment and not have any taxes with it. That is the beauty of the self-directed IRA. And those are some of the things that I talked about over the weekend. Because many people, when they hear the term creative financing, because I talked about, the benefits of raising capital, I talked about why there are self-directed IRA investors who do want to lend on your real estate deals that you're doing, hence OPM, other people's money. Right now, on at least the online space, most of the people who know of the term of OPM, other people's money, they really only want to segment it into one area. And that's usually with funding. But when you talk about and you think about, OPM can be a myriad of things. It's not just one thing. But the self directed IRA investor knows that. And so I talked about that there's $1 trillion of assets that's under the custodian's control, because with the self directed IRA, your money is held with a custodian. So it's not something that you have access to like a bank account or what have you. You do have to have a custodian. And with that custodian has the control of your account. And when I say control, just making sure that there are legal ramifications, that you are staying within the confines of the US tax code, because the self-directed IRA is heavily looked at by the IRS. So the custodian, even though you have the investment control to invest in what you want to invest in, but the custodian is there to make sure that what you're doing is within the legal ramifications of the tax code. So, another thing that I talked about during the creative financing workshop that I did over the weekend, I talked about two calculations that real estate investors should have an idea of how it works if they are looking to leverage other people's money, OPM. And those two calculations was the LTV, loan to value, and the ITV, investment to value. If you're an active real estate investor and you have had to leverage, whether it was hard money funds, or you may have had to, um, or you may have had to um, leverage somebody else's funds, understand that most investors look at loan to value. Loan to value has to do with how much how much equity does the borrower have in the deal to be able to invest in it if they want to leverage a an entity's fund or a private investor. If they want to use OPM, other people's money, they need to know the LTV. You'll be surprised how many investors I talk to. They want access to money, they want access to OPM, other people's money, but they but they have no idea what LTV is. Another thing I talked about was the ITV. And remember, I said ITV is investment to value. Investment to value has to do with the investor who is lending on the deal. Now, that calculation is important for the investor because the investor needs to know how much equity they're going to have in the deal. And that was the one thing that I wanted to bring home to those that I spoke to over the weekend is that if you're looking to leverage other people's money, do you know what's in it for the investor who is loaning you the money? Most people, when they are looking to leverage other people's money, yeah, they know about the house. They know about the hard asset that they want to be able to purchase and borrow money for that particular asset to earn a profit. But they're never looking at the investor. What's in it for the investor? And I'm a big advocate of is that most people, I don't know about you, most people really only tune into what's in it for me. Understand, ladies and gentlemen, when an investor lends money on a deal, you want to use OPM, whether they're using their line of credit, whether they're using their credit card, whether they're using retirement funds, what have you, they want to know the numbers. Whereas the person who's looking to borrow the money is probably looking at the house, is probably looking at, all the intangible things that, no, should I say the tangible things that don't matter. Whereas the investor who's lending you the money, they're looking at the intangible things. They're looking at the things that you're not thinking of, because like I said, they're usually not going to tell you what they want their investment to value be. But once again, what I had explained to the individuals I spoke to is that it is good for you to have that conversation and to be able to calculate with a particular deal that you're looking to lend on, what could be the ITV for that investor, because now you can have a conversation of the meeting of the minds. It is a meeting of the minds to get very clear on what is it that they're looking for. Are they looking to just be a passive investor in the deal, meaning they just want to put their money to work, or do they want to be a active participant? Not only are they putting their money to work, but they also want to be an active participant with what it is that you're doing. They want to have some say, because those two things have a lot to do with the yield that you would be giving them. You'll be surprised. So many investors, they want to leverage OPM, other people's money, but they don't even know the yield. They don't know what's a good yield for them to feel like it's a win-win for them. All they know is the hard number. Oh, I know that if I do this real estate deal, I want to be able to profit X amount of dollars. But what's the yield on the money that you're borrowing? Is it even a good yield? Because even if you're leveraging your own money, whether it's a line of credit, whether it's a credit card, whether it's some type of loan, what is your own LTV? Start looking at things from that standpoint, not the tangible, but the intangible things, because it's going to make you a better investor and a better steward of OPM, other people's money. Because understand, ladies and gentlemen, this is what I always tell clients: money is an abundant source. You'll be surprised how many people will lend to you if you can literally communicate what's in it for them in terms of the yield and the money. Not to look at things just, hey, I'm just looking for some money. Because I see a lot on social media, I'm in a lot of real estate groups, and you'll be surprised how people will put a post in a Facebook group. They'll say, hey, I'm looking to do this particular deal. They may give us some pricing or what have you, but they never really go into the numbers of the yield, the interest rate of what they are looking to get an interest rate on, and then also how it would benefit the investor. You'll be surprised. So many investors never run their numbers because they're thinking it's the money. The money is what they need to be focused on, and that's why my goal for the rest of this year is to really hone in on the creative financing, because I noticed that when I was doing a lot of content on business funding, business credit, business lines of credit, leveraging credit cards, you'll be surprised how so many people never really knew the numbers behind what it is that they were looking to invest in. All they were looking at, that one hard number, is I need X amount of dollars. They wasn't looking at the cash on cash return. They weren't looking at the ROI, and you could forget it. Maybe they looked at the LTV. They may have looked at that, but they definitely wasn't looking at the investment to value for that investor. Because imagine you really having a conversation with an investor, and they want to loan you the money. But what about if the interest rate is not really, advantageous for you? How do you know that? Or are you just listening to a number? Because most people, they are so hung up on, I need the money. They have desperation on their breath that they're not even looking at what the interest rate and the yield is for them to be able to borrow on that money. And that's why I always say, I hate to use this analogy, but if you think about the game of Monopoly, the bank never loses, the lender never loses. And that is what no lender is ever going to teach you. And so creative financing gives you the opportunity to put yourself in the lender's seat. Because when you start to put yourself into the lender's seat, where you begin to just have an idea of, if I was lending money myself on this deal, would it be advantageous? Do you see how, if you just turn that perspective? Because I always say to people, would you lend to you? Let's take the scenario of what you're given. That's why I like to work with experienced investors, those who have leveraged money before, whether it was hard money or maybe it was a private lender. And I always say, let's look at all the terms, just going on terms, not looking at the tangible is the house, the tangible is the investment, the tangible is the actual doing of the real estate. Let's look at the intangibles, the things that people don't really pay attention to, and that has to do with the terms of the real estate, that you raised your hand and say, yes, I agree to those terms. Now that you may have did that real estate deal, you've looked at those terms. Were those terms really favorable for you? Meaning, were you okay with borrowing money, and maybe you had to pay 15% interest rate, plus you had to pay 2 points or a point and a half on the money? Were you now? Once again, I'm not saying anything is wrong with it, because I feel like for some people to get into the game, you may not get the best terms. I find it so interesting how people will hear sound bites on the internet of all these great terms that people are getting. Oh, I didn't have to, I know there's lenders doing a 90-10 LTV. I know some that they're doing 100% of the financing, and I just have to make the interest payments. But a lot of times, the individuals and the investors who are getting those great terms, they have already built a relationship with an investor or a entity to be able to get those terms. But you who are new to it, hey, you may have to pay 80, 80-20 split, maybe a 70-30. Interest rate may be a little higher, and you may have to pay points. But for that person who's like, well, I don't want to do anything, then that is why you need to be a student of creative financing, so you can find other ways outside of the norm of how you could take the terms that you had in the past and make them more favorable. So those are things that we went over this weekend during the live virtual workshop that I did on creative financing, really hunkering down on self-directed IRA investors, how to find them, Once again, like I said, how to, really analyze the numbers that make it a win-win for you and the investor. How to put together your marketing pieces to be able to invest with those uh, self-directed IRA lenders. So those are some of the things that we talked about. Because once again, creative financing does not get rich. It's not a get rich quick scheme. But what it is not get rich slow. But what it is, going back to what I was saying, it will allow you to get financial freedom because it allows you to do things that's outside of the norm of what you may be used to with real estate, especially if you're self-employed. Someone like myself, the reason why I really became a student of this information, because when I got into real estate back in '08, it, it was really a cookie cutter type of way. I mean, DSCR loans weren't out. All the non-QM, of course, you had the bad ninja loans, but I'm talking about all the creative things that they have now. They didn't really have that for self-employed individuals. I mean, you literally, you had to, show tax returns, show cash flow. There was a lot of presentation and financial information that you had to put up front to be able to get into deals. And when I started to really study, read books, go to, seminars, invest in myself, that's where I learned that, oh man, it is another way. There are out of the box strategies when it comes to financing that allows a person to be in the driver's seat to be able to invest in real estate. So that is my goal for the next coming weeks. Like I said, in the month of April, I talked a lot about creative financing, but I am going to go deeper. I'm going to start talking about the history of creative financing, the history of banking, why lending laws are the way they are, as well as to go into talking about the money, the intangibles, the terms that have to go into you wanting to leverage other people's money. So if that is something that you're interested in, please continue to tune into the Never Lose a Deal podcast. And so if you're listening on the streaming apps, please rate it, leave me a comment, and if you're watching on YouTube, leave me a comment there. I'm still getting used to the lingo with the podcasting because it's a little different to YouTube. But once again, if you're new to me and you've never came across me before, please, in the show notes, you can go to my YouTube channel, and there I have over 800 videos talking about the topic of creative financing in the realm, of course, credit, business credit, funding, as well as these topics as well, self-directed IRAs and real estate. So I've been talking about this topic for many years. I'm not new to it, but if you need to see more documentation, more results of who I am and what I know, please go to my YouTube video. The link will be under the show note. So once again, this is Lorelia signing off. Like I said, always go to my YouTube channel because what I will be doing is I will be putting bonus content that will not be on the podcast. This is just bonus content that I'm just going to have on YouTube to go deeper into these topics. So to learn more about me, you can go to www.neverloseadeal.com, and I will see you in the other podcast episode. Okay, this is Lorelia, and I am signing off. See you in the next show. Bye-bye.